kind of follow up on that, Mr. Shelton.
Sure.
Then would you say that with the FDIC, that should also be just a one-person director? Maybe the National Credit Union Administration, that should also be a one-person director? The SEC, one-person director?
I'm not saying that, sir. Well, those particular agencies, quite frankly, have more than one person and have been ineffective.
So you would advocate that we should have a one-person director?
I'm advocating having someone that can actually carry out the responsibilities of protecting the American people.
And if we look outside of banking, we can look to the Federal Trade Commission and the U.S. Consumer Protection Safety Commission, both consumer protection agencies that use commissions as well. Are they also ineffective?
Well, let me just say that very well, if you wanted to address those agencies, we'd be happy to come back and testify on that.
But they're ineffective. So
you issue of the Consumer Financial Protection Bureau.
You think that we should have, we should restructure the government where these agencies have one director?
We believe it will be a major improvement over the system we have right now.
Ms. Smith, was your credit union one of the contributing factors to the financial crisis?
No, we were not.
And you've heard a lot about predatory lending today. Were you engaged in predatory lending?
No, I do not.
Okay, and I guess I was going to ask Mrs. Anderson the same question. I assume her answer would have been the same. But as we've gone through these new Dodd-Frank regulations, is it fair to say that the regulations on your credit union have increased dramatically?
Yes, they have.
And with the new regulations that are going to come from the CFPB, they'll also continue to increase with regulation, right?
Yes, they will.
And you're not opposed to smart regulation in banking, are you?
No, I am not.
But
I just feel that the unregulated should be regulated.
But over burdensome regulation, increased cost, doesn't it?
Correct.
And if you look at economies of scale, it makes it more difficult for a small bank or credit union to compete against the big banks, doesn't it?
Yes, it does.
You don't have the economies of scale, right?
Right.
And in the end, it drives up costs for your consumers, right? Okay. And you didn't have anything to do with the financial crisis or anything to do with predatory lending.
No, sir.
But your consumers are paying the price for it.
Yes, they are.
In regard to what we're talking about with predatory lending, Mr. Shelton, I agree with you. It's atrocious what happened in the marketplace, and you and I are on the same page with that. And it has to be addressed, and you'll find no argument from me with regard to that. I want to talk about how the CFPB has been set up, however. You know, I look at, the review process. I mean, and to have a situation where basically the only way FSOC can review a rule from CFPB is if we have a systemic risk in the marketplace, in the financial system. I mean, the burden is incredibly high, isn't it? Would you agree with that?
I'm still not seeing a problem.
So you would agree that you're okay with that, an incredibly high burden, where the only way we review it is with systemic risk to the system?
Well, I would love to hear the arguments as to why that is problematic.
Well, I guess I would say, shouldn't we say if at some point consumer protection is an affront to safety and soundness, shouldn't we have FSOC then review those situations as well, even though it doesn't create a systemic risk in the whole financial industry?
Perhaps.
Okay, so okay, good. We're on the same page then.
Perhaps.
Okay, and then if you look at the review process, we have FSOC is a 10-person board. Ms. Warren, or the director of the CFPB, is one of the 10. Do you think the director of the Bureau should be one of the 10 that votes on FSOC?
I see no problem with that. The continuity, I think, will be extremely important to any deliberations by that particular
Do you think
body.
they're going to be impartial? Do you think the director is going to be impartial on that board?
I think more importantly, they'll be informed. And that's extremely important in a situation like this.
You can be informed without having a vote, right? I mean, you can still present your case, but not be a voting member, right?
Well, even this body doesn't do an assessment of how a government agency is performing its responsibilities without bringing the head of that agency before it. Quite frankly, you want that intervention. You want that involvement in making your deliberations.
Right, and you can do that without giving the director a vote. And this is my concern. I mean,
but it's only one out of how many?
Of 10.
1 out of 10.
1 out of 10, and
Okay.
and it's a three. We need a 2/3 majority to pass it.
Absolutely.
And with that 2/3 majority, one of the voting members is the director of the Bureau. So this is a super majority. Doesn't it make sense to say if we're dealing, I mean, and we're all on the same page, we want consumer protection.
Yes, we do.
And we also have a concern for safety and soundness.
Yes, we do.
And if there's an affront to safety and soundness, why don't we go to FSOC, take the bureau director out of play of FSOC and have a 5-4 majority to overrule the ruling from the CFPB.
That has been their overview, that has been their responsibility,
Gentleman's
and quite
time has
frankly, they
expired.
haven't carried it out.
But you'd
Mr.
agree with that? I'm sorry, I'll
Yeah.
yield.